Hey everybody, Mynor Ramos here. Again, I am joined by Mike Domico, and today we're going to be just going over this new series of videos that we're going to be covering where, we've been getting a lot of people asking us, like, we want to know more about these banking concepts. We want to really understand the insurance products at the advanced level. This is why this is advanced insurance strategies. And there are a lot of people that are, maybe in the captive world, and they really want to go into the um in and you just kind of start operating on your own. So the principles that we're going to talk about are going to be the closed end loans, and we'll have a list, and we'll go and break it down each one by video. But I wanted to give you just a high level overview. The next is going to be the interest accumulation, mortgage amortization, interest cancellation, open-ended credit lines. Oh, I love this one. Float and leverage, and then an offset account. As we get into, as you guys are gonna your appetite's gonna get satisfied here, and then we'll finish up with the strategic debt payoff. Now, why do we do this? Because there's a lot of misinformation out there, and some people are talking about velocity banking, and some people are talking about infinite banking, and I think that they try to jumble them, and put them all together, and like they really need to begin their construct and really need to understand what they're talking about. So the language and the words and the concepts are really what we're trying to teach. We're coming at it from an educational aspect, not asking anybody for anything, but we do know that this leads to people wanting to know more, where we're going to be doing a webinar, and the link will be included in the video. So we're going to get right to it. But Mike, did you want to add anything about the 8 banking principles as it relates to what we're doing here?
Well, just this, and this goes back to something we discussed just recently, and that is the reason this isn't done on the internet. Pull a lever, buy a candy bar, and why a professional is so important. So, talking to an agent the other day, young agent starting out, and he was talking about, well, this concept and this principle and this. I said, stop. You understand? It's all life insurance. And it's the same thing in banking. These are all banking jargons, so to speak. And a lot of agents use them, a lot of mortgage people use them, and that's all well and good. They have their own language. But here's what's important to both the professional who's learning and also the potential prospect or client. Make sure your professional can explain these things. So if someone says to me, closed-end loans, Mynor, I had to ask you, okay, what do you mean by closed-end loans? Okay, sure, there are principles behind all of these, and they're all important. But what's important to the average public is that you have an advisor that can advise. Okay, some marketing term, like I told the agent the other day, whether you're buying last expenses or a infinite banking policy, the underlying instrument is exactly the same. It's life insurance. My dad used to say all the time, the only difference between selling insurance to the blue-collar worker and the owner of the business that the blue-collar worker worked for was the number of zeros. The principle's the same.
That's right. That's wonderful. All right. Well, great stuff. That's a good introduction to this series of the 8 banking principles we're going to be covering. So look out for the description below, and don't forget, look, you're here, so you might as well subscribe. Number one, comment, like it, and share it with other people. But here's one thing that you're not going to get. You're not going to get a whole lot of entertainment here. It's education, because you're here because you want to elevate your thinking. So thanks for watching, and we'll look out for the next episode on the 8 banking principles. Thank you, guys.
Thank you, Mynor.